Wall Street just dropped a flood of new ratings on big tech. And it's a tale of contrasts. Microsoft, analysts are calling it unstoppable. Meta, facing another expensive AI gamble. Tesla, still the physical AI leader but stretched thin. And Roblox, quietly turning into the next YouTube of Gen Z. Let's unpack who's winning, who's wobbling, and where the real opportunity lies. Morgan Stanley just lifted its Microsoft price target to $650, calling it their top pick in all of software. Analyst Keith Weiss said he'd be an aggressive buyer on any pullbacks. And for good reason. Commercial bookings up 111% year-over-year, CRPO growth accelerating to 35%, and margins expanding 230 basis points. In plain English, Microsoft's demand is outrunning supply. Even CFO Amy Hood admitted they can't build servers fast enough to meet AI workloads. That's why Morgan Stanley expects supply constraints to last through fiscal year 26. And that's actually bullish, because it means demand isn't slowing. This is what a Gen AI winner looks like: stable, profitable, and growing faster than ever. Jefferies upgraded Apple, but only to hold. They're impressed with the December quarter outlook, expecting 10 to 12% revenue growth, the first double-digit jump since 2022. Services are the star again, up 15%, with iPhone revenue climbing 6%. Even Mac made a comeback with 13% growth. But here's the issue: the long-term picture still looks flat. China is weak, and Jefferies warns that 2026 growth could stall with higher iPhone prices and a less favorable product mix. So yes, Apple's stock remains expensive, and it'll stay expensive as long as investors keep hoping for a foldable iPhone miracle. Oppenheimer just downgraded Meta, comparing its new superintelligence project to the disastrous metaverse spending spree of 2021 to 2022. CapEx and expenses for 2026 are both tracking well above street expectations, and the company warned of costs rising significantly faster next year. Yes, ads are up 25%. But investors aren't buying the idea of another multi-year spending wave without clear ROI. Meta and Alphabet now trade at the same forward PE, around 21 times 2027 earnings. And here's the kicker: analysts think Google search could outgrow Meta as soon as 2026. Meta might be chasing the AI dream again, but this time, it feels more like déjà vu. Bank of America raised Tesla's target to 471, still calling it a neutral, but praising its dominance in physical AI. They now value Tesla like a tech conglomerate: 45% robotaxi, 19% Optimus, 17% FSD, and only 12% for core automotive. That's wild. But here's the challenge: valuation. Even with revenue up 12% year-on-year to $28 billion, margins are shrinking and AI costs are soaring. Operating expenses jumped 44%, with AI R&D alone up 57%. Tesla's robotaxi launch across 10 metro areas by year-end could reignite growth, but for now, Musk's warning of a few rough quarters still holds. Tesla isn't just a car company anymore, but investors might need patience to see that transformation pay off. And finally, a surprise winner, Roblox. Goldman Sachs just upgraded it to buy with a massive $180 price target. That's nearly 60% upside. The reason? Momentum everywhere. Bookings, DAUs, and revenue are all rising, and creators are flooding in, up 27% last quarter. Roblox is spending heavily on AI infrastructure and trust and safety, but Goldman sees it as long-term platform building, not waste. They even compared Roblox's growth cycle to YouTube's first decade, powered by virality, user content, and monetization. If they're right, Roblox could quietly become the next big consumer internet story of the 2030s. So, here's the scoreboard. Microsoft, the clear AI infrastructure winner. Apple, steady but slowing. Meta, spending heavy, returns unclear. Tesla, visionary but volatile. Roblox, risky yet rising fast. The market's message is clear: sustainable AI demand beats flashy headlines. So if you're investing for 2025, don't just chase the next hype cycle. Look for companies with real earnings, real margins, and real AI utility. Thanks for watching. I'm Emily Carter, and I'll see you in the next one.